Hello, this is the TradeSight Forex Market Preview and International Economic Data Roadmap for the week beginning Sunday the 22nd of September, ending Friday the 27th of September 2013. And then after that, we're heading into, you guessed it, the fourth quarter of 2013. I can barely believe that that's already upon us. Here's a look at the Aussie dollar daily chart. No real reason I'm starting here other than to show you that we have drifted back upwards here. We did see some decline in the dollar this week. Let's jump over to the dollar index itself. Now you can see the plunge after the Fed announcement and the continuing of QE. You notice the 9-bar setup phase is the bottom so far on that move. And that's right at that static trend line. So even though we closed below it, we have not broken it with a confirmation day, and we're getting back above it. So that line is becoming support. We didn't end up with the 13 seeker buy signal that I wanted, but we certainly are using that area that I was looking at for support anyway. So far we'll see if we get a little turn up here in the market. A lot of the pairs on the daily charts are giving us signals suggesting the dollar is going to get stronger anyways. So here's the Euro dollar. You'll notice it did have a 13 seeker sell signal right here. The risk line for that goes up to here, which would be new highs. In general, this is a nice cut for a breakout, but with that signal and with the dollar looking more like a bounce point, then it's hard to really focus on this as being a long for a breakout here. But you know, the risk line's there for a reason. We'll see if we start to get a rollover here. Obviously, that would fit with the dollar getting stronger. Meanwhile, we'll take a look at the pound dollar, which has been even stronger of late and doesn't really have anything going in terms of the seeker or Comer count. Now let's talk about the action we actually saw this week. 30-minute bars, 24 hours a day on the dollar index to start with. And what you'll notice is, look at this, look how flat. I mean, this is Monday over here on the left, not much movement. Tuesday, completely flat. Wednesday, flat until that Fed announcement where the dollar tanked sharply, and then it resumed going dead flat. Into Thursday, a little drift up here, so flat for almost 24 hours into the close on Friday. So really flat action out of the dollar itself, but it doesn't look much different when you look at the major pairs. We had a couple days this week where our trades didn't even trigger because the ranges were so poor. Look at the euro right here, for example, or down here. Just really flat, a couple days with 40 pips of range. That's not really tradable for us. You'd rather not get into something because you're more likely to get stopped out in that action. Here's the pound. And from high to low for the week, this one does have some range, 280 pips, but again, a lot of real flat points that move. And we caught that move. We were long the pound before the announcement, made a couple hundred pips on that. That was our big winner for the week. So at least we got it, but it could have been worse, right? You'll notice here, I'm taking you back to the euro for a second, just because the whole range for the week is basically from 33.30 to 35.60. It's 230 pips. And then you look at this move on the Fed announcement from here to here, and that's 140 pips of it. So 230 pip total move for the whole week, for the week, 140 pips in a very short period of time on the Fed. That's pretty remarkable in general. All right, what do we got coming up this next week? Remember, this Friday that we just had was a triple expiration. That means options, futures, and commodities all expired. When that happens, you tend to get a flat session and everything, and we did for the most part. So now let's look forward to what's coming up in the week ahead. I've got the right week this time. German federal elections over the weekend. Bank holiday in Japan. We got flash manufacturing PMI out of China. French flash manufacturing services. German flash manufacturing and flash services. Same stuff out of broad Europe. That's all Monday morning. You've got flash manufacturing PMI out of the U.S. Monday morning. Just a couple speeches from some key people around the world in terms of the economics. German IFO business climate at 4 a.m. Eastern Time Tuesday. Nothing major there. Core retail sales out of Canada. Nothing major. We've got the HPI out of the U.S. The CB Consumer Confidence number out of the U.S. at 10 a.m. Eastern Time. Big for stocks, but not really big for Forex, along with Richmond Manufacturing Index. UK, a couple more speeches. Trade balance out of New Zealand Tuesday night. CSPI out of Japan. Very little data on Wednesday. The UBS consumption indicator out of Switzerland at 2 a.m. Eastern Time. CBI realized sales data out of the UK. We've got core durable goods out of the US and new home sales. Crude oil inventories is a non-event. Then you skip all the way till 4 a.m. the next day, almost about 18 hours without any data to speak of, and you get the M3 money supply out of Europe, Italian retail sales and private loans, current account out of the UK, and their final GDP number from Q2. You're also going to get our final GDP number. That's not a big number. It's the first look that comes once quarterly. That's the big one. There certainly will be some revisions here, but it's not nearly as big of a deal at this point as the first look back 2 months ago. Unemployment claims, that's a weekly number. Pending home sales, natty gas, and then Japan that evening, their CPI numbers for their Tokyo and nationally. Business confidence out of New Zealand. And then in Europe, German preliminary CPI, French consumer spending. Number's so important, they've got it listed twice, but it's not the same data, so they've got a mistake here on Forex Factory. KOF, economic barometer out of Switzerland. Retail PMI out of Europe. Index of services out of UK. Italian 10-year bond auction, and then the U.S. Look at all this on Friday. There's a speech, big deal. Core PCE prices, personal income and spending, revised University of Michigan data, and more speeches. We start our daylight savings time, still a month off here in the U.S., but New Zealand switching next weekend. When you start to get those out of Europe, it kind of set things out of phase for a weekend or so, so be aware of that coming up. So what's the focal point this week? What's the big one? We don't have any of our big three. We don't have a first look at GDP. We don't have a Fed announcement. It's pretty much just a straightforward trading week, and we're on a new option cycle. So not much to be afraid of. I'm not ready to go back to full size because we certainly haven't seen the ranges for it, but they could pick up at any time at this point heading into the time of year that we are. And once we start to see a little consistency there, I'll jump back from half size to full size. In the meantime, you can't complain about the winter we had this week. The lack of action in general was a bummer, but it is what it is. Everybody have a great trading weekend. Charts, as usual, brought to you by eSignal 11. We'll be in the lab trading them all week.